continuing from where we left in the last class, what did we do in the last class? We did have a list of transactions, about 28 transactions if I am not wrong, that is what I see from here. These transactions, last few cases what we did was these transactions we made what is called as a journal entry. When I say journal entry, that is we made the debit and credit entry. If you have for the purpose for you to refresh, it is sort of written out in an Excel out here, and that Excel file is also uploaded. I have just opened the Excel file out here, and then you can actually view that Excel file also. That is all the journal entries with the debit and credit transaction. This is again, let me reiterate one specific aspect out here. I am not doing it in the exact same way what a typical accountant does. If I have to look at the way in which, the manner in which an accountant does this job, normally it will go like this, in the sense it will have what you call it as, it will have first what is called as a date column, that is date of the transaction. Then it will have what is called as particulars, the kind of transaction, that is whatever, what is the debit and the credit entry. Then it will have a debit column, then it will have a credit column, and of course I did miss out one aspect, one more aspect out here. In between it will have one more column what is called as ledger folio. It will have one more aspect called as ledger folio. That is, ledger folio is this transaction is getting posted in a ledger. Which page? The page number of that ledger, the folio number of that particular ledger, that is wherever the debit and credit transaction goes, that ledger folio number also we will basically enter for every transaction. Supposing I say cash account is debited to what is called as bank account. What do I do? Which page number, that is folio number in the ledger is cash account, I enter the folio number here. Which folio number is the bank account is there, I will enter the bank account out here, and of course the amount that goes on. And then in addition you will also find what is called as, typical accountants will do what is called as a narration. Narration means what is this? It can say I am withdrawing cash from the bank for office use, that is another transaction what you had. You will write that basic entire narration out here in this particular space, or that is what basically we see as far as a typical accountant, how they basically do this kind, enter these kind of transactions out here. Now anyway, our objective is not that, our objective is more to understand the philosophy, what goes behind, especially when we talk about accounting out there. That is the reason why we did this. These we posted onto a ledger. When we posted onto a ledger, what basically we saw in the last class is all these kind of transactions that is getting posted out here. Now I have again another Excel sheet that is also uploaded out here in the process out here, which gives you all this, that is capital account, your cash account, your bank account, your sales account, and then your purchase account, your debtors account, your creditors account, your discount account, sales returns account, purchase returns account, loan account, office rent, and then basically this entire thing is also right here in this process. Now what do we do with this? We will say we will prepare what is called as a profit or loss statement as a next step, and also the balance sheet as the final step out here from these ledger balances what we have. Now if I have to prepare that, so what do you have to do? First and foremost, we will come back to it, you can always refer to this, this is all uploaded out here. What do we do? What we did out here? What we did was basically we close all these accounts out here. Now in the balance sheet I need to have what is the balance of creditors that is there. I need to know what is the balance of creditors. If I see out here 2900 plus 100, 3300 is the creditors out here. Out of 3300 we have about 1030, that is less in the process, 1130, that is what we have out here is 3300 minus 1130, that is 2200, 2170 is the creditors balance, that is what we will write as balance carried down, 2170 is the balance out here. If you want, you can again go to that Excel for the ease of understanding out here, I will have what is called as my creditors account somewhere out here. You can actually see this particular aspect out here. You can see this balance carried down 2170, that is there. Let me just bold that number out here. Balance carried down means, for example, why do we say balance carried down? Now typically if we actually look at what do you call it as a ledger account out here, imagine this ledger, what you are posting is you are doing it every month. Next month when you are beginning with this balance. I will say balance brought down 2170, and then from that I will keep on adding the next what is called as creditors related transaction to this. So, I have closed it for this particular month, I have done the totaling, I have closed it for this particular month out here. I am sorry, let me just do it below. I have closed it for this particular month here. I will say balance brought down what is called as 2170, and then I will start entering. In short, if we go back to the Excel also, you can actually see out here what do we do out here, because this we will say 3000, what do you call it as basically 3300 out here, that is the total. Sorry, we move to the next column out here 3300, and then that basically I close this total out here. I simply what do you call it as I am just closing it. Then I will say on the first of next month I will say balance brought down. How much is the balance brought down? Balance brought down in this particular case is 2170. I will just enter 2170 out here and begin this month operation in the process out here. Am I with you on this? So, we will begin the next month, whatever is the additions to the creditors you will have, I will keep on entering out here, whatever is the deletions to the creditors what I have, whatever is the reductions to the creditors what I have, I will keep on entering out here on the debit side, whatever this thing we will sort of keep entering in this particular fashion out here. That is what basically we call it as, what do you call it, we call it as, we call it basically as what is called as closing the accounts and then starting it again and again, and then you go on and on out there. See, normally it is also denoted that this is credit side, this is debit side, that is what we wrote. I mean you can write that also in the process out here, that is I can say it is basically, I am sorry, let me just undo it. Out here, and then I will say this is what is called as debit side, and then this is what is called as credit side out here, and then all I do is I just merge these cell alone to make the heading look a little better in the process out here. That is all. This is all what I have basically done out here. So, what happens? This is debit and this is basically credit out here in the process outside, debit side, credit side, it is very clear, and then not only is it very clear, you will also see how the account is closed and the balance is brought back out here. This is something which you can actually note out here. So, we will do the same thing for every account in the process out here. So, we will do the same thing for every account in the process. Of course, many of these we have not totaled, we will do it right here in the process for the ease of understanding out here. For the ease of your understanding out here, we have basically done all these totals out here in the process. You can see from the next month you will basically start carrying out in the following out here. That is what, for example, for debtors also I have not done, whereas for all these other accounts I have done. It is easier for me to sort of look at it in the process. Let me sort of look at data, closing the debtors account. How do I close the debtors account out here? I am just basically what do you call it as, I am just closing the debtors account out here, and then obviously this will also be the same in the process out here. To see that, you will see that basically the balancing figure, the balance that is carried down is about 480 in the process out here. So, what do we do out here in this case? I will say this is the total balance out here, I have sort of closed it, this is the total balance I have closed it. Then I will say beginning of next month out here, because this is carried forward this side, I am sort of bringing it back, the balance brought down in this particular case is 480, that is the beginning of next month I will begin out here in the process. Am I communicating in this process? Okay. Let us do the same thing with the other, with what is called as purchase account also. Let us do the same thing when we say purchase account also in the process out here. Now, out here I have what is called as, I write as creditor, creditors out here, and then I can just do it, and then out here I can always write what is called as debtors out here, and I have done the same thing out here in this particular case out here. Let us see this. In this case what happened? If you actually see this purchases out here, this is basically total of purchases. Instead of total of purchases out here, all I have to do is basically I just total what is called as the purchases out there, that is 3,500, and basically in this case instead of by P&L, I can, by P&L means I am basically carrying it to P&L. I will always say, because if I am closing every month, I will say by balance carried down, I will say about 3,500 out here. So, that is exactly the same aspect total out here what I sort of do in the process. All that I need to do is I am closing this particular account, and this is the basic balance out here, basically what we see. And then at the beginning of the next month, supposing you are preparing a balance sheet only at the end of the year, you are preparing the balance sheet at the end of the year. Every month you are closing the account. So, what have I done? I have closed this account, and next month I will say to balance brought down. It is brought down from the last month, that is how much is the amount out here. I will say it is brought down for about 3,500. I will begin my accounting for the next month from here. Am I sure? Am I clear now? I think at least 3 accounts have basically balanced it and then basically shown out here. In this particular case also, discount instead of P&L, I will normally enter it as basically P&L is where it is going to balance carried, basically what is called as balance carried down is what I will normally write in this particular case. So, I will begin the next month out here, all these balance carried down. So, I am just going to bold it for the purpose of our understanding out here. Basically when I say P&L, it is basically what happens is we are in this particular case, why did we write specifically P&L? We wrote specifically P&L because we are not having any other additions, that is we are not continuing the same account for the next month and so on and so forth. We are closing this account and directly taking it to the profit or loss statement. That is where we wrote what is called as a P&L out here. Otherwise, if you are in a particular company out here, for example, if you are preparing a ledger every month from the transactions and you are preparing a balance sheet only at the end of the year, that means at the end of every month you close the account and you carry the balance, you add the balance to the next month's what activities out there, and then at the end of second month it will be a accumulation of the activities of the second month plus the balance carried forward from the first month. I repeat, at the end of the second month whatever activities that are entered in the second month plus whatever is the balance that is carried from the first month. At the end of the third month what happens, whatever activities for the third month plus the balance that is carried forward for the first 2 months put together. In the fourth month what happens, activities of the 4 months plus the balance that is carried forward from the month 1, month 2 and month 3, all 3 put together and so on and so forth. So, what happens finally when you take it to P&L and you close it for the year, I will say carry it to P&L in the process. That is where the reason we will write, we normally wrote as P&L. In this particular case, for the benefit of your understanding, let me keep it as balance carried down. That is basically what I sort of it is, let me maintain what you call it as uniformity in the process out here. Let me maintain uniformity in the process out here, so that you do not get confused. So, that is the reason what we sort of look at in this particular case out here, purchase returns, everything, and then you can see that in this particular case everything is basically sort of taken care of, because especially in this particular case what we did, that is the reason we put it initially as P&L, but that is okay, that we will stand, we can, you can, it is for, if as long as you are able to understand the purpose, it is perfectly fine out here. Now, we have the balances of all these accounts out here. Let us say sales also, sales we are carrying it directly to the P&L. I will say, no, we normally call it as okay, balance carried down in this particular case. I mean, you can actually look at what is the figure out here in the process. That is what I am just highlighting all these figures for the purpose of ease for you in the out here. You will see all these are basically bold figures out here. Bold figures means that is basically balance that is carried down in the process out here. Now, let us go back here. Now, what is the logical next step out here? The logical next step in this particular case when you are doing your accounting is to prepare a profit or loss statement. To prepare a profit or loss statement. Again, you will have n number of columns and out here and everything. I am not getting into all that. I am just putting only the particulars and basically what is called as the amount out here. Now, first and foremost, what is the first and foremost ledger account we had? We forget about the journal entry out here and we focus only on the journal entry. It is a capital account. Does it find a place anywhere in the balance sheet? No. So, we will not look at that. Next, cash. Does it find any space anywhere in the balance sheet, anywhere in the P&L? No, let us ignore it. Third, bank account. Does it find a place anywhere in the P&L account? No, we will ignore it. Fourth, sales. Does it find a place anywhere in the P&L account? Yes, sales is basically an income for you. So, it is part of your P&L statement out there. That is, it is part of an income out here. That is where we initially wrote it as to P&L, profit and loss account for the purpose of ease. So, that basically I have changed it basically and made it balance carried down. I mean you can, if you want to retain the same way, you can retain the same way. So, sales is a what you call it as basically, which is basically taken to what is called as a P&L. I have sort of colored it because I want to denote somewhere that I have already taken it out here. Now, what is called as sales in the process 4075, if I am not wrong, 4075. Now, another question what some of you might have is, should I always prepare the profit and loss in this state way? That is, should it have two sides, should it be the right side be what is called as all my income and should right side be all my expenditure, etc. Need not be. If you actually look at the P&L statements for any annual report, if you pick up or any financial statement presented by the company, it is presented in a sequential, that is, you have the income and you have the expenditure. You could also present it this way. There is no standard hard and fast rule. This is the method that is followed by typical erstwhile what you call it as traditional accounting method. So, I am just sticking to that. You want, I will write all my income first and then all my expenditure at the bottom, perfectly all right, no questions about it, right. Okay. Now, sales is done. Now, I move to the next aspect out here. After sales, what is the next aspect? Purchases out there. Yes, there is purchases will also be part of your basic expenditure out there. In this particular case, we do not have any opening stock or we do not have any what is called as closing stock also in this particular case. So, we assume that these entire purchases what you have made is consumed. We assume that this entire purchases what you have made is basically consumed by the company, by what is called as the business out there. There is no stock. Supposing it said there was a stock of what you call it as raw material stock account out here, there are some stock out there. Basically, what do you enter in a P&L statement? As said earlier in the class 1, class 2 itself, we enter only such amount in the P&L which pertains to the period for which you are preparing this financial statement. That is, in the period whatever is consumed is what you will basically enter in the P&L. So, in this case we are assumed that entire purchases has been consumed. So, I will say what is the total value of the purchases out here. What is the total value of the purchases? Total value of the purchases is basically 3500. Now, do I have an Excel for this? Yes, I have an Excel for P&L and balance sheet also. It is there in the same file. You can refer to it. I am doing it in this manually for ease of understanding. Otherwise, you can go back and refer that also. Now, the purchases is basically made out here. In this particular case, I am closing, I am basically entered the purchases out here. See, for every account you will enter what is called as a debit, DR, CRER and in the process out here. I have not done it, you could basically do that part of it also. Now, debtors, will it find a place in the balance sheet P&L? No. Creditors, will it find a place in the P&L? No, it will all find a place only in the balance sheet. Now, let us look at discount. What is discount? Discount is basically an income or an expenditure. In this particular case, it is an income or an expenditure. If it is an income, it will find a place in the P&L. If it is expenditure, it will find a place in the P&L. In this case, what I have done? I have prepared a single discount account. I have net both out there. There is a net discount you have received up to the extent of about 30 rupees, and there is a discount that you have given to the extent of about 20 rupees out there. That is, when you sold goods to Vijay merchant, you gave what is called as a 20 rupee discount. When you bought goods from somebody, if I have to look at the journal entry out here, and then you can go back to the journal entry and also see that, you will see that in this particular case, that is, you look at the 10th, 11th and 10th and 11th transaction out here, when you basically bought goods from E engineer and settled it, you received what is called as a 30 rupee discount out there. So there is a $30 discount out here, there is a $20 discount that you have given, $30 discount you have gained. So what happens? Net gain in this particular case is what we have entered out here. There is a $10 discount is what you have basically gained out there. So the $10 discount what you have gained is basically what is it? It is a income what you have received, net of discount, because the actual discount that you have received is 30. So what I have entered, and the net of discount is basically $10 what you have actually received out there. Move further in the process. I am just moving further in this process out here. So discount is over. Now sales returns, the purchase returns. What is this sales returns and what is this purchase returns out there? Sales returns and purchase returns are, so you are selling goods, somebody is returning it, you are purchasing goods and then you are returning it, whatever may be the reason. Now if I look at sales returns is to the extent of $20, that is, you have sold and the goods has come back to you. When you have sold and goods have come back to you, what is the basically what do we do in this particular case? Is your sale 4075? No, it is sale is not 4075. I will say net sale in this particular case is not 4075, it is basically what is called as 4055 only, because 100 rupees goods worth of goods has come back to you. Now what did you do then? Maybe you sold it to somebody else, that is why there is no inventory which is pending. Maybe you sold it to somebody else. What we have is aggregate total sales out here, that is where we do not have any stock. If you say the goods which have come back, $20 worth of goods which have come back is still there in my godown, then the $20 will basically be stock. So what will be consumed will be 3500 minus the $20 out there, minus that $20 out there. Am I with you on this? Now similar exactly in this particular case, if you actually see this in this particular case, you will also see what is called as purchase returns out here. Purchase, you have purchased, you have returned back 100 rupees worth of goods out there. When you have returned back 100 rupees worth of goods to somebody, then what is your net purchase out here? Your net purchase is not 3500, it is basically what happens is net purchase is what is called as 3500, 400, I will say net of purchase. Am I with you on this? Am I with you on this? So now move further in this particular case. If I have to move further in this particular case, let us say, let us look at this is over, discount is over, sales return is over. I come to what is called as loan to Amarnath account. Giving a loan is basically an asset for you, will not come. What is called as office rent, office salary. See, we have said P&L out here in this particular case, because it is we are directly taking it to P&L. Everything I have not made it balance carried down, some of it I have retained it this way, basically because for the ease of your understanding. So office rent, office salaries basically pertain to what is called office rent, office salaries and general expenditure. All these three pertain what is called as to P&L account out here. I will remove the yellow shading when I put the file for you guys to refer. The yellow shading is just done now for the purpose of ease of understanding out here. You see office rent is 150, office salaries is 250, general expenditure is 25. Office rent is 150, office salaries is 250. What is it? It is an expenditure. Office rent is 150, office salaries is 250, general expenditure is $25, and then there is something called a stationery. Stationery, you can actually see this, there is something that is called as basically stationery out here in the process, stationery out here, that is also come to P&L, that is to the extent of about $25 in this particular case. So that also I will add that to $25 out here. Now that is all what pertains to P&L. Now I will have to find out what is the profit or loss out here. My total income is 4065, my total income is 4065. I am just writing this as the differential figure between this and this is basically what is called as a profit or what is called as a loss out here. The differential figure is, that is 3400, 3550, 3550 plus another 250 is 3800, 3850. 3850 is what is the expenditure side. So, 3850 minus your what is called as 4065 is 150 plus 65, 150 plus 65 is 215 rupees is basically what is called as a profit out here. 215 is basically what is called as, it is a positive figure, it is basically profit out here. Let me go back and check whether what have I done in my P&L statement out here. You will actually see net profit out here in its caps, I am sorry. Net profit out there, basically in this particular case I will say net profit is $215 in this particular case out here. I am just highlighting this whole thing. So, you can actually see that I have written income, expenditure, everything properly, and then basically we have basically entered it out here. Am I with you on this? Okay. Now, the next statement, we move to the next statement, this part is done, we move to the next statement, that is what is called as actually the next statement out here, that is what we call it as the balance sheet. Of course, you have the same way, you could present it the columnar way, assets, liabilities, you could present it, interchange it, present it, columnar, whatever manner you want to present it. I am not getting into that level of detail out here. Now, first thing in the P&L balance, in the P&L we will go to this basic Excel out here. When you go to this basic Excel, first thing what is going to be in the balance sheet, you will say capital plus liability, my capital balance out here. Basically, if my capital balance out here in this particular case out here, if I see, I am just going to use a different color out here in the process out here. My capital that will go into the balance sheet, my capital liabilities plus capital, if I sort of see this, it say plus capital, what is called as capital, what is the balance? Balance is about 10,000. That is what we basically see this. Now, next we will go to the next aspect out here in this particular case. Cash account, what is cash? Balance is right here, cash is basically an asset out there, and then what is the cash balance out there? Cash balance is 10,205 out here. Basically, we will find a place in the balance sheet, it will find a place out here. Now, cash is $10,205 if I am not wrong. I think that is what I remember reading it out here. Yeah, 10,205 out there. Next aspect, bank account, bank again an asset for you, we will basically take it, what is the balance? Bank balance is only about $1,000 out here, and I will enter what is called as bank, bank is about $1,000 out here, we enter. Huh? We will come to that, we will come to that, we will come to drawings, we will come to drawings, Pratik, no problem, perfectly all right. I am just going and why I am doing it, I am let me go in a sequential way, so that easier for everybody to understand out there. Now, this is already entered in the P&L, this is entered in the P&L. Next, what is the account what we have? We have what is called as debtors out here. What is debtors out there? Debtors is basically an asset for you. When debtors is an asset, what is the balance out there? Balance is about $480 out there, debtors out here, $80 out there. Go to the next one. In this particular case, I will sort of move the next one. Basically, what we see is creditors out here. What is the balance of creditors out here? Balance of creditors out here is 2,170. To creditors, what is creditors? Creditors is a liability for me. 2,000. I forget the number. 1 second. Let me just check. 2,170. Next, I just go back here, this part is done, this part is done, this part is done, then there is what is called as a loan account out here. Loan, when you have provided loan, it is an asset for you, it is an asset for you. So, I will go back out here to my balance sheet out there and then enter loan provided $200. then what happens out here in this particular case? If I move back out here, then in this particular case loan is over, then drawings. Drawings means what happens? Drawings means reduction in the capital, that is what I have basically explained. Drawings is nothing but reduction in the capital out there, less drawings, that is about 500. So, what we call it as net worth, sorry, not net worth, this is basically capital as of now is about 2000. I am just going to, I am not erasing it, do not worry, I am just rewriting it, I am just creating some space out here. I am just creating some space, that is all, okay, that is all, nothing else. Capital as of now, what you call it as basically in this particular case, that is net capital out here is 9,500. Now, is that all? There is something, one major aspect which we have left out. What is that major aspect which we have left out here? Basically, when we talk about a P&L, I am just going to I am going to use a different color for my P&L out here. Basically, I am going to use a different color for my P&L out here. When I say P&L out here, to whom does this profit belong? This profit belongs to the equity providers, equity providers. When I say equity, I am talking about the basically the capital provider out there. So, what happens? This net profit, we call it as, it is termed as, we will say what you call it as P&L account balance. Sometimes it is termed as retained earnings. It is basically the profit and P&L, in this particular case 215, and this will be 517 9,415 is basically what we call it as net worth of the enterprise out here. Now, in this case let me just total it, it is about 11,885 in this process out here. Let me say 5 and then 8 and then 4 plus 2 is 6 plus 2 is 8 and then 1 out here, your balance sheet basically is taken care of, that is assets and liabilities. Now, what is the format? It keeps saying, I have not followed a typical accountant format. Accountant format is fixed asset, then investment. You remember what as a slide I had put up, and that is the basic format what we do. I have actually done it on an Excel also out here for the purpose of ease of understanding out here in this case. In this particular case, we have exactly not followed what you call it as a conventional accounting style. If conventional accounting style I find, if I follow, cash will never be on the top out there, cash will always be on the bottom. So, what is the order in which they present? They present what is called as asset which is fixed on top, asset which is easily convertible to cash or which is equivalent to cash at the bottom out there. That is the sequence in which they present, but we are not typical accountants out here. So, that is not the objective. Objective here is to classify what is an asset and what is a liability, and that is what basically we have done out here, and then you can actually see this basically balance sheet out there. So, what did we do in the last couple of classes? We have taken you, I have done a walkthrough for you of the journey from accounting journey from the time or the moment the transaction occurs till basically the time we close the accounts. So, what did we do? Moment the transaction happens, I will record it in a journal, that is what basically you saw out here. At every periodic intervals, I take these journals and then group together, and then what is called as I post this basically into a ledger and a ledger account out here. At the end of a specified period, what do? I take these ledger accounts and then I prepare a profit or loss account and basically what is called as a balance sheet. So, that is the entire journey. In between there is something called a trial balance, we are not even getting into it, do not worry. They take you through the entire journey, walk you through the entire journey from the minute the transaction happens till the closure, that is the balance sheet out here. Hope you enjoyed this. Thank you.